Something has been quietly happening to our bank accounts. For the first time in what feels like forever, your savings can actually start making you some real money. So let's break down what is going on.
I want you to take a good, long look at this number, 5%. And no, this isn't some kind of risky investment return. This is the interest rate you can find right now on a simple, safe savings account. It's a total game changer.
So what is happening? It might feel like this came out of absolutely nowhere, but there's a very clear story behind this big shift. And we're going to get right into why your savings account is suddenly working hard for you again. All right, so first up, the 5% savings surprise. Let's talk about what this actually means in real life. For years, and I mean years, savers got practically nothing back from their banks. Well, that era, it's over, at least for now.
It's a really simple idea, right? The interest rate is just the bank paying you for the privilege of holding on to your cash. Think of it as your reward for being a good saver.
And wow, what a reward it's become. You have to remember, just a couple of years ago, that reward was almost non-existent. We're talking rates like 0.1% or even lower. Getting less than 1% was just normal.
But now, just look at this difference. With a 5% rate, that same $10,000 can turn into an extra $500 a year, just for sitting there safely. That's a huge leap from the $10 or so you might have earned before.
So, the big question is, how did we get here? Did all the banks suddenly get super generous? Well, spoiler alert, not quite. The real answer is all about economics. And the main character in this entire story is the U.S. Federal Reserve. You've probably heard him called the Fed. They are the ones pulling the economic levers that led directly to these high savings rates.
Okay, so here's how the Fed's strategy works. It's like a chain reaction. First, their main goal was to fight soaring inflation. The tool they used to do that, they raised interest rates, making it more expensive to borrow money. And the result for us? Well, banks now have to compete for our cash. And they do that by offering much, much higher savings rates. So yeah, we're kind of benefiting from their inflation-fighting playbook.
Now, knowing why these rates are so high is great and all, but knowing where to find them, that's even better. Because here's the thing, not all banks are offering these awesome rates. You've got to know where to look.
And here's the secret. It's all about online banks versus traditional banks. Your typical big-name bank on the corner, they have huge costs, paying for all those physical branches. Online-only banks don't have that overhead, so they can pass those savings on to you in the form of higher rates. The bottom line is pretty clear. If you really want that 5% return, you're almost definitely going to find it at an online bank.
Okay, let's bring this all back home. We've talked about the what, the why, and the where. So now let's get to the most important part. What does this new reality actually mean for your money?
The benefits are just crystal clear. First, you're earning real passive income with basically zero risk. Your emergency fund isn't just sitting there anymore, it's actively growing. For retirees who might be living on fixed incomes, this is a really big deal. In short, all that cash you worked so hard to save is finally working for you again.
Let's throw another number up here, $2,500.
So what's that about? Well, if you happen to have $50,000 in savings, a 5% rate earns you an extra $2,500 a year, risk-free. Just think about that for a second. That's a vacation, or a few months of rent, or a serious boost to your retirement fund, all from money that, until recently, was earning pretty much nothing.
Okay, so it's really easy to get excited about all this, but to get the full picture, we have to talk about the catch, because there is one. There's another huge economic force at play here that we just can't ignore. And that force is inflation. It's the very thing the Fed has been trying to fight. All it means is that your money doesn't buy as much as it used to. So we've got to factor that in to see what we're really gaining.
So let's do the math. If your savings are earning 5%, but prices are rising by, say, 4% because of inflation, your real return, your actual increase in buying power, is only about 1%. Now look, that's still a win, which is great, but it's really important to know it's not the full 5%.
And that context is so key. It helps us understand the right job for this kind of account. A high-yield savings account is the perfect place for money you need to keep safe and get to easily, like an emergency fund or a down payment you're saving for. It's not really meant to beat inflation over the long haul like stocks might.
So, where do we go from here? Are these 5% rates the new normal? Or is this just a temporary window of opportunity for all of us?
This quote really captures the moment we're in. After more than a decade of getting almost zero return on your cash, savers are finally in a fantastic position.
It's a pretty unique time, and it's definitely worth paying attention to.
But that's just it. It really is a window, and windows can close. The same force that gave us these high rates, the Fed, can also take them away. If inflation cools off and the economy needs a little boost, the Fed will probably cut rates, and you can bet that savings account rates will follow them right back down.
Which leaves us with one final thought. When you can combine these high returns with almost no risk, is it possible that we are living through the single best time to be a saver in over a decade? The numbers sure seem to suggest it might be. So the only question left is, what are you going to do with this opportunity?